morning, everybody. Happy Wednesday. Thank you all so much for hopping on today. We have Jen and Kaylee with Team Green, Fairway Mortgage. They are our in-house lending extraordinaire, visionary, gorgeous ladies that help us with all of our things. So, Jen, can you give us a little bit of a market snapshot? Like, what's going on with the market now? You know, what are interest rates doing? What do you foresee them happening?
Yeah, so I'm in the break room here in our office. If it's a little loud, just let me know. It was better than being in the bullpen. So at any rate, market snapshot. Right now, we are kind of in a spot where typically things slow down, but I feel like we're kind of on pace with where we've been the rest of the year as far as buy and sell. Still not a lot of inventory, but a lot of more clients are getting out there and we're seeing a lot more offers accepted. And I would say more reasonable prices, right? Meaning that we're not bidding $30,000, $40,000, $50,000 over anymore. We're starting to see more inventory. We're seeing some more of these values and some of these property prices drop a little bit. So on that tip, you know, we're doing really, really well. But with the holidays, things typically slow down a little bit, right? People aren't looking to move their kids and get everything done before the holidays and getting into Thanksgiving and Christmas. So I feel that this is a great time if you have people that are looking to buy or looking to list to do so, because the people that need to get there are going to snap that up super quick, right? The other part that we're seeing is that interest rates have remained relatively steady over the last couple of weeks, but they are higher than they were kind of in the middle of or the beginning of this year. Beginning of this year, we could probably write a loan in the low 2s, low 3% interest rate. We're kind of in that middle low 3.25, 3.375 now on a regular fixed rate 30-year without any discount points. And if we choose to buy down the rate, we could probably get something with a 2 in front of it. But I always say at this rate, 3%, I mean, money's still free, right? At this point, the difference between 2.99 and 3.25, it's just, now it's semantics. So the whole idea though, is if we're getting out there and we've had people in the market for a while, we got to get them ready instead of looking at that 2.99 or 3.125. 3.125. Let's start talking about a little bit higher interest rates so that they're not sticker shock or expecting the market to fall or expecting those rates to come down, because I don't think that's going to happen. Property values are continuing to increase due to lack of inventory. Rates are going to continue to increase just based on, you know, the fact that inflation is higher, supply chain, all this other stuff that's going on in the world. There's no way that our economy could make it work if we didn't kind of maintain that level. So that's what we're seeing, kind of in a nutshell as far as where that market is and kind of what we're seeing. Hopefully we'll see some more new builds and some other pieces that can kind of come in too that will kind of infuse that, getting into that, you know, first quarter. Hey, Zara. So.
Awesome. Thank you. Quick question. Can you give us the 40,000 foot overview of what it means to buy down a rate? Like, what is that process? What does that mean?
Very good. I'm gonna use that for my video today when I'm on Facebook. So I'll do the same thing here and kind of like that 1 minute snapshot or less. So when we talk about interest rates, it's not really the interest rates that move up and down every day, because that's what people kind of talk about. It's the cost associated with offering that rate that's going to be moving up and down. So what we're looking at is when we talk about at par, if you think about interest rates as being like, say, on a teeter-totter, when we're at par, we're even. It doesn't cost me anything to give that rate to the client, but the client isn't going to pay anything for it either. So we're at par. The only money they're paying or the cash that they're bringing to the table includes their down payment, normal closing costs, and escrows, right? That's where we're at in the middle of that. Now, if we get on the lower end of that teeter-totter, that means we're going to have a lower interest rate. Well, that lower interest rate comes at a little bit more of a cost. So the whole idea is that you pay a little bit more upfront, whether it be one full discount point is equivalent to 1% of the entire loan amount, right? So if it's a $100,000 loan, let's just say for easy math, you're adding an extra $1,000 on top of those costs that we talked about before. That initial cost allows them to lock in the interest rate on that lower end of the teeter-totter for the longer term of the loan. And in the long run, they're going to save way more than the $1,000 that they put into it up front, right? And then conversely, if you're at the top of that teeter-totter, typically I have a little bit of a credit because it doesn't cost me as much to give that rate. And I can give the client a little bit of money as far as what we call a lender credit. So haven't done a whole lot of lender credits these days because at these rates and in these price points, even a 1% of a, let's say $300,000 loan, it's $3,000. It really doesn't adjust for those clients very much, even if they're in down payment assistance. So that's how that works. How do we determine which client is going to be good for what? We let the client decide. These are your options. Would you pay, are you okay to pay a little bit more now? This is how much you're going to save in the long run. Or, hey, gosh, could that extra couple of $1,000s be really set up for getting you a new washing machine? Or do you really need to keep that for that rainy day fund? Because guess what? The holidays are coming around the corner because life happens, right? But the client will tell you, and obviously the lower interest rates carry a little bit different payment. But I would say for every 1,000 in this price point or in this market, we're probably looking at a $20, $22 difference if we move for each 0.25% increment, depending on your loan amounts, right? If you guys want, and Kaylee will help us put in the chat our information. So if you want, put your info in there and I can share with you our free mobile app, and we can also brand it with you on it. It gives you a payment calculator so that you can put those numbers in there as you're getting out with some of your clients, and then also gives you an opportunity to help them. And if we brand it with you, then every time you're looking at it and you share it with your clients, it has both of us on there. So it's a really great tool.
Awesome. So guys, if you, yep, Sarah put it in there. I want it too. Do you want phone number or email?
Can we do both?
Yes.
Hey, Jen, I had a question. I was reading one of your emails right around Halloween, and you were talking about a credit score of 580, that it went down to 580. Can you explain more about how that works and how it plays in?
Sure. So previously, any government-backed loans, obviously loans that the government is the investor on, FHA, VA, and then USDA. Those all carried a minimum credit score of 600. They increased that credit bureau score requirement during COVID and through some of the other crazy things that were going on because they were concerned about non-repayment. And obviously credit bureau scoring is an indicator of how you're going to do on your loans going forward. So what they've done is they feel that there's enough stability, if you will, in the market, that they went ahead and they said, okay, we're going to take it back to the 580 that we were looking at before. And that allows more people to get into that market. Just bear in mind, though, with a 580 score, that's kind of, again, the threshold, right? And on these government-backed loans, if they meet the criteria to get in with a credit bureau score, they meet the debt to income ratio, and they have the funds to bring to the table, then they check the 3 marks that we look at for any loan approval, right? So in that particular case, FHA, it should work, right? The trick, though, is in this price point, are there a lot of houses to get in, right? So for 2020, and we're looking at 2020, it's 2021 already, my bad.
Almost 2022.
I know, it's almost 2022. See, I already lost the year there. But the minimum loan amount, or the maximum loan amount for an FHA loan is currently $368,000. So FHA's minimum down payment is 3.5%. So what that works out to, if the clients need to come in with a minimum down payment, we're looking at a loan amount of about 380 or a purchase price of about 382 for this year's loan limit. That loan limit next year is going to increase for FHA, which is going to be great. So clients at that 580 above or above credit bureau score are going to be able to get into a little bit higher price point, but we don't quite know yet exactly where that loan limit's going to fall for 2022. They've changed the conventional loan limits already, and FHA will probably follow, but because it's a government-backed loan, they're going to be a little bit more conservative and a little bit slower, right? But I anticipate us, hopefully, fingers crossed, getting into price point that'll be in really, really close to that 400,000 mark in this government-backed loan, so that more people can get into the market, right? So hopefully that answers your question, but they increase those limits to get there.
Yeah, it did. It's great. You mentioned conventional loan limit. Is that the 548, whatever it
45.
was?
Very good.
Did
Yep.
that go up? That went
Uh-huh.
up?
Yeah, it was 548, 250.
Yeah.
That random number, but going into 2022, it's going to be 625,000, which is huge because now, because property values are moving up so quickly. Now, one really, really great thing is that if we have a client that's looking to get into this price point and into this market now, we are able to originate that today. And we don't have to wait till January technically for it to go into play based on how the guidelines are. So if we have a client that's ready to go, do not have them wait. Let's get them in the market. Let's get them looking at that 625 minimum, and then we can roll from there.
Jen, I want to double check. Is it 625 or 645?
625.
Huh, okay. Because I'm positive at one of our previous meetings with a different lender, I had heard it was 645 and I had written it down that way and I had given that information to my client. Darn it.
And it might be, I don't know, if we do the math on it, 645 with the minimum down payment could get us to the 620. That's a $20,000 down payment, 20,000 into, hold on, 20,000 into 600,000 or 645. Be about a 3% down payment. So that's probably where that number came from.
All right. And can I ask another quick question? Let's assume that I have a client who is choosing to go to new builds. And he doesn't want to use their lender. He wants to use his own lender. But his lender, let's assume that given him the option to lock in an interest rate right now, although the closing will be 9 months from now with an extra fee, assuming it's about $1,500. Do you do that?
We can do that. And we do have long lock programs as well. And quite honestly, it really depends on where your client wants to be and how scared they are about moving in those rates. We actually are able to lock within that same 9 to 10 month time frame. But typically those additional fees, and depending on some lenders, like we make it so that you're not locked into it. You get your money back if you decide not to move forward for whatever reason.
Yeah.
But there are often times where that's locked in with that initial fee is non-refundable. So let's just make sure that we're advocating for the right thing, because yes, rates are going to move up. And just like Jamie's question or the question earlier, talk about that rate buy down. It's kind of the same idea. We're going to pay a little bit of a fee right now to make sure that we can guarantee a rate while we're waiting for the new build to go. But are those rates going to move that dramatically between now and the next 9 months? I don't know. And I would never, that's where we really have to have that conversation with your client to determine where they really, really want to be. Does it make, and that same idea, does it make sense to put this extra money in there to save in the long run? Or the rates, albeit they've moved up about 1/8 to 1/4 since the beginning of the year, but is that 1/8 or 1/4 going to make up for that difference when we get 9 months from now? But none of us have a crystal ball. The whole idea is we want to be the best fiduciaries for our clients. We definitely want to give them the information and let them make the decision. So then that way they can't come back and be like, oh, well, Jen Patel said this, or Ellen said that you needed to do it this way. Albeit we are the experts in our field, it's still ultimately their choice on, again, what rate.
But at least I know that you do that. So if they're interested, they have a way to come and talk to you about that. Okay, got it.
Yep.
Good question.
Good question.
Does anybody have any more questions for Jen? Because I'd like to give Kaylee a chance to say hi.
Before I turn it over to Kaylee real quick, I want to let you guys know we do Lender Tuesdays. I know, sorry, Ellen. We do Lender Tuesdays. We do a 5-week series typically every quarter or every couple of months. So we're doing our next one next Tuesday, 10 to 11 on down payment assistance here in the KWIF training room. We, getting into next year, I probably won't do another 5-week series before the end of this year. We'll probably start up again in January. And then I'm working with Greg, who is amazing tech guy. If you don't know him, you need to get him in your house because he will help me figure out how to put that on Zoom. so that we can reach more people, not only in our center and outside. So
Yeah, that was actually it was gonna be my next question. Would you prefer to do it in the afternoon? Because, 10 a.m. is generally the time that we're with the clients doing our leads and this and that, and we cannot attend. It's a bad time.
sure, I can make it whenever you guys want getting forward. I'll work with Ellen and the team here to determine also too when it's available. We'll still do it on Tuesdays probably, but it'll just be a matter of just timing.
Yeah, they are, is fine. It's just that, or, have a Zoom option so we can attend through the Zoom.
Right.
Fantastic.
Great, thank you.
Kaylee, talk to us about what you can do to help. I would say, and I know you know what I'm going to ask you because it's my favorite thing, to target individuals who own a home. And we want to say, hey, you should list your house because this is what it's worth. Do you have something that might help these agents do that?
I have exactly something that can help do that. So if you ladies have either of you heard of HomeBot before?
Yes.
Zara has. Jamie, you have?
You just need to change my information if you have to on that thing. It's not KW Phoenix anymore.
Okay. I don't know if it'll let me do that from my end. That might be something you'll have to do from your end because we don't really have any control over your account.
Okay.
Like I can only see how many people you have in there. I can't see their information or who's in there,
Okay, got it. I have the control. Haha.
Yeah.
I got it.
And Jamie, you've heard of it or are you familiar with it? Are you using it?
I haven't used it. I've just heard you talk about it in past presentations,
Okay.
but no, I have never.
Okay. I will send you an invite to HomeBot after we get off this call. But if you're not using it, everyone should be using it because it is such a great tool to stay in front of people consistently every single month with value. People love opening them and reading them. I can attest to that. I have access to our branch manager's HomeBot account, and he's got almost 2,000 people in there. And I can see how many times all these people are opening their email every single month and viewing their home. And it's so cool. We also get lots of, so I had an agent that was, for like a year was on the fence about signing up for it, or she just kept forgetting about it and pushing it on the back burner. And she finally put, I think 150 people in there, and right off the bat had 6 people reaching out to her, telling her how much they loved the information and how much thanked her for putting them on there. And then 2 people that disputed their home value, which is a great opportunity to say, oh, okay, well, let's look into this. Let's do a CMA for you, whatever. You're now having a conversation that would not have happened otherwise. So if you're not using it, I recommend everyone to use it. You can have up to 25 people in there for free. So if you don't have a ton of people to throw in there right away, just, put in as many as you can, and it is completely free. If you go over 25, you can have up to 500. And as long as we're sponsoring you, then we pay for half of it. So it's $50 a month, but we're paying for 25, and then you would pay for 25. So it's a really inexpensive way to stay in front of everybody every month with value. It has the highest open rate out of any email marketing we send out, which is about 60%. Anyone have questions on that?
Nope. I was literally just going to ask you, Kaylee, why don't you tell us what the open rate is on that? So thank you. It's
really high. So I don't know if, Ellen and Zara, maybe you're on Reggie's email lists and you're always getting emails from him about, who's on call, or you're getting his monthly newsletter. Out of all the email marketing that he sends out, HomeBot has the highest open rate, which is, 60% is really high for email marketing. So that's how much people enjoy it. That's what a great tool it is. And it's a set it and forget it. You're not having to think about it. It's just going out on your behalf every month. And you know, as you meet people or get contact information from people, I would be putting all those people in there. So as long as you have their first name, last name, property address, and email address, you can put them in there. So yeah, it's a great tool. The other thing I was going to mention too, because we're approaching the holidays, is Sly Broadcast. Sly Broadcast is our is a system that we use where you can record a like a pre-recorded voicemail and then send it out to a list of phone numbers. So it's a great way to reach out to your database and just say, hey, it's Jamie, just wanted to wish you a happy Thanksgiving or happy holidays or happy New Year or whatever it may be. It's also a great tool to use if you're doing any client events like pie giveaways in the next couple of weeks. You know, it's a great tool to use in addition to others. So if you were doing like a pie event and you sent out an email saying, you know, get back to me if you want a pumpkin or apple pie, and then, you know, you're not getting responses. Like I would send out an email one day, and then the next week you're going to send out a Sly Broadcast, and then the next week you're going to send out a text message. Just different ways of getting in front of people and staying in front of people is really the best way to do it. So I just wanted to remind you guys that, you know, we have that Sly Broadcast system that's to use or for use to any of our agents. And it's a great time to use it at any time during the holidays.
Absolutely. And just so you guys don't know, in case you guys don't know, Sly Broadcast, have you ever received a phone call that rang once and then like stopped ringing and you're like, what happened? And then you get a voicemail? You just got a Sly dial.
Yeah.
So it calls them and like, oh, that's weird. It just stopped ringing. And then you can record a message and it will just dump that into the person's voicemail. So, which is nice because, as somebody pointed out to me a while ago, it hits the older generation that really likes to get that voicemail message and have that kind of contact. But it also gets the younger generation, because I don't know about you, but I read 95% of my voicemails.
Yes, I do too. I don't listen to them. I just read them.
I just read them until it's like, this did not translate. Hold on. I got it.
Yes, exactly.
Jamie, you had raised your hand. Did you have a quick question?
Oh, I was just going to say, I totally want to try HomeBot. So what do I need to do?
I will just send you an invite. I have your, your email on here. So it will come from our, it will come from Reggie Green, which is our branch manager. It's all under his HomeBot account. And I just send you an invite and you can either sign up for the freemium plan, which is up to 25 people for free, or you can do the pro plan, which is, you know, over 25 people if you're going to have up to 500. So if you don't have that many right now, that's totally fine. I would recommend just signing up for the freemium, and then you can, you know, you can always change later if you wanted to update it to more people. But I see lots of people with the intention of putting more than 25 in there, and then they sign up for the pro plan and then they have like 3 people in there, and then they're just wasting $25 a month. So I would recommend just starting with the freemium. If you don't right off the bat have enough people to put in there, don't do that.
Absolutely. Zara, you had a quick question.
Yes, I do, but it's not about HomeBot.
That's okay.
Okay, it's about Mojo Dialer. I was wondering if it's possible, or were you already providing the neighborhood service of the Mojo Dialer? The reason I ask that, because their phone numbers that come up with the circle search is generally, you know, safe to call.
Jen, do you know the answer to that question? I mean, I personally, I don't actually use the Mojo Dialer because I don't really have a use for it. I'm not calling through lists of people. But Jen has probably actually used it and can maybe speak to that.
Yeah, so with the Mojo Dialer, and I think with what Zara's asking about, is we don't provide a list per se, because we just don't have the information on it. But if you get your list and it's already scrubbed from your title partner, you can take that Excel spreadsheet, load it into Mojo, and then our Mojo Dialer, and dial from there. And it'll keep that data for you in your particular, in your bucket, if you will, because you're going to create your own little however you do your call
Yeah.
list.
Yeah.
But
But
yes,
that's-
we
but
you can
that's
use our
not-
Mojo Dialer for that.
But that's not what I was trying to ask. Mojo Dialer also, the company itself, the app itself, provides a neighborhood service. And that service is actually an extra $50 per month, as far as I know, if they haven't increased it. So then what you do with the dialer is, let's say you're having an open house. You go to the Mojo Dialer, use your circle search, find your home that you're hosting an open house at, and then let's say a mile or half-mile radius. Mojo Dialer automatically pulls out the phone numbers for that specific area for you. And those are all filtered generally for do not call lists and stuff. So we don't have to worry about making illegal calls. So it's a
Right.
service they provide, not the ones, not like the lists we get and upload them on their website and then app and then call them with their three-line system.
Yeah, unfortunately, we wouldn't participate or pay for that additional service because
Okay.
it's just not something that we do necessarily. But again, if you're wanting to do that with your Mojo Dialer, you could. If you want to use ours, which is free, Title still can offer that same, relatively that same service for free for you. And then those lists are also scrubbed. So that's what I was trying to say. We don't pay for it, or we don't pay that extra because we don't have to, and Title can still get you that same info.
Yeah.
Yes, but we pay for our Mojo Dialer line, which our agents are able to use, but we're
Yeah.
not paying for the additional upgrades to that account. Does that make sense?
Thank you. Yep. Oh, yeah, it does. Thank you.
Okay.
Awesome. Okay, guys, it is 9:29. I want to be respectful of everybody's morning. Does anybody have any really quick questions? Okay, awesome. Thank you guys so much for hopping on the call today. Jen and Kaylee, thank you so much for being on our call and imparting your knowledge and wisdom. Real fast, guys. Just looking. Tomorrow, we have Escrow 101 with Title Alliance here in the office. This is a certification class. So if you are ever going to write a deal, which all of you are, this is a great way to know what happens after I get this signed contract and I give it to Title. Do they just disappear for 4 weeks and then come back? No, they're doing a whole process of things behind the scenes that you guys need to know what that is so that you can tell your clients what the process is. So that is at 1 p.m. here in the office. The other one is we have our hashtag social media support group that our very own Lindsay, who's sitting here and you can't see her, is going to be heading up, and she's fantastic. So if you guys use social media, don't use social media, feel like you do well, feel like you don't do well, this is for you. Because we're going to get in community with other people and see what's working for them, what's not working for them, and be able to ask questions. So those are both tomorrow. Other than that, have a fantastic day. Reach out to me if you have questions, and I will see you tomorrow afternoon. Ready?
All right, thank you.
I have